All right, what is up, YouTube? So we must be, we always must draw a red flag if somebody can never show their percentage returns and they're always quick to show their, dollar amount. We never want to get the dollar amount confused with how successful a person is becoming in the stock market. We want to measure that with the percentage returns. And with the percentage returns, that will show a clear picture of how successful that person is. Now, with Robinhood, the percentage return will, it's easily shown on the chart every time you open, your app. You can look at a 1 month view, a 3 month view, a 1 year view, or all time view. So it's not that hard for anybody to be using Robinhood not to be able to show their percentage returns. So I wanted to make that clear. If somebody can, if they're teaching you how to, trade stocks, we want to see that percentage returns, and we want to see if that person is actually credible. Also, we want to and using any other broker, TD Ameritrade, Scottrade, anything like that. There is a way to track your percentage returns, so there is absolutely no excuse not to be able to track your percentage returns. So let's get straight into the video. We're gonna see how a lot of these stocks are doing so far. So we see that Dust, the gold short, is definitely doing good. I backed out of the trade. I seen the gold was definitely giving out, so I went ahead, backed out of the trade, and as we see, gold is definitely giving out on us. So I alerted you guys earlier. The last video and the videos before that, I told everybody gold is definitely going to get hit once it tries that $1,300 level. I was only trying to play gold for for the RSI, and like I said, the RSI does lead us wrong when you play certain types of ETFs. I know the ETFs does follow, the actual, I would say the gold contract, but NUGT, let's see where that's at. NUGT is at $9.60, right? So we want to pay attention to how the stocks move. We see a bottom right here. The chart actually did that itself, so the bottom might be at $9.46. But for a stock that follows contracts, we must follow the contract. So we look at GDX. We see GDX is backing off at that $25 level, like I said it would. I mean, this is definitely easy. If you look at the technicals, you should be very successful. So now that we look at gold, we see it's backing off at a $1,300 level. It couldn't even try the $1,300 level. So now people are taking profits, and people will look for some. A lot of people are looking for a reason to go ahead and buy gold. And when we fall back on the support, this might be a reason to buy gold. We see this green bar piercing through support or piercing through resistance. Like I said, people will always be looking for reasons to go ahead and buy gold because they think that the market is going to crash soon. So this election that is upcoming, this might be people's chance to go ahead and buy gold. We see gold is down 0.86%. That's definitely not bad, but if you add leverage onto it, that is definitely a situation you do not want to be in. So we see gold is definitely down roughly 2%. And we see that, it's been an uptick from about $7 all the way to $11. Now, if you followed the RSI perfectly, I'm pretty sure you would have doubled your money by now. But a lot of people, they do not follow RSI. They do not follow any technicals. The RSI, the daily moving average, the chalk and oscillator, whatever tool that you use to help you, find the bottom of stocks, I would definitely check that out. And Netflix is now just broken 140. It's now at 139. Like I said, guys, it is easy to predict where these stocks are going if you understand the technicals. Now that we see a market, we see a market or Dow Jones sell off, I told you which stock will be the first. Netflix will be the first. And as you see, Netflix is definitely following suit. And as we see, Netflix is piercing through this 140 handle. Now, 140, we go to 135. That's definitely a range that we want to check out for Netflix, simply because Netflix is definitely, it might get oversold, but we want to make sure that we're watching out for the technicals on that. And we see that gaps might need to be filled right here at this 137 level. So Netflix might fill a gap here, or it might find support at that beginning of the gap right here. So Netflix might bounce on support, but I'm not seeing any reason for anybody to be bullish on Netflix, simply because you have a really bearish number that's showing that it's really weak. And as we see right here, miss, and they're going to come out with another miss this quarter. So we want to pay attention to every single thing that the market throws at us. We want to read up on the news. We want to make sure that we're set up pretty nice for a good profit. So we see CUDA, Barracuda Networks. We see a green bar for today. I'm pretty sure tomorrow we might see a red bar, but this typically when people start to jump back into the stock, we see that the RSI is definitely showing us that it's oversold for a current period now, and I'm in at about an average price of $19.90. I did, I was able to get filled at $19.80s, but this stock definitely did take a dip, but I really wasn't too concerned about the dip that it was taking. We see the chalk and oscillator showing us that, there's still some more room for this stock to run. And the chalk and oscillator is still not showing that there are actual buyers coming in, sustainable buyers that are coming in that will move the stock price up even more. So this lets us know $20, $21. And to get to this right here, this is definitely, this definitely might happen. But we really need to see this thing hold $20 to understand where the stock is going. So if it's able to hold $20, we become more bullish on it, and $20 will be the new support, and we'll see how far we can get after that $20. We see the market is down. This stock is up 1%. We know why it's up 1% because it got hit yesterday. So I wasn't able to get in at 1906. That was definitely the low price for this stock. But I'm in at 1990, still in at the 19s. So we see we have a $20 handle. So we're going to move in the $5 increments. So 20, 25 if we have a long-term view on it. So if we have a 3-month view on it, we want to see if the stock is going to go back to this $25 level, or we're going to see if it's going to have some trouble. So they're pricing in what happened here is that, the market priced in what happened on the conference call and on the expectations that came back lighter than last year's quarter. So that's typically what happens. That's typically what happens when you see a sell-off like this. People want to take profits, but we see that they delivered a really good a beat. And if we see the stock try to recover, this is definitely a profitable trade that people want to be in. This is a name that you want to be behind. Also, I know a lot of people, they still miss out on stocks because they're too busy chasing this right here, this HIPH. This is just an example of a sub-zero play that typically does not move and has no intention of moving. This is definitely where people, I would say they're looking to sell their position. And one way they can sell their position, because they've been holding the bag so long, is that they can actually get in promoters who can promote the stock. What happens when they promote the stock? This is typically, they increase liquidity, but the stock is not seeing liquidity yet. So we're going to wait and see when the stock will see liquidity. So we're in at 0002. That's the price you can buy. You cannot sell at, you cannot buy prices at 0001. Some sub-zero stocks, they typically go down to triple zeros or quad zero, and the stock is absolutely worthless, and you cannot buy it. So we always want to check out things like that. We see the dust. We sold at about 26. We see it rally another 20 something, or another $2. So let's check out dust. We see dust is definitely uprising. We see the support has been met for dust, and typically you want to pay attention to all these things that I point out. We see that bottom, the support bottom right here. We see support bottom right here. The next price is $30, so we need to check that out. I'm gonna go ahead and put the resistance level up there. So we're gonna see what happens. Is it gonna have trouble breaking through that $30 barrier? But this is definitely going off the gold miners, and we must find the gold miners. The gold miners is this right here, GDX. That's typically what these stocks are moving off of, and really what you have to understand is what these stocks are moving, what ETF is this following. So when the leverage is added, such as NUGT, we want to make sure that whatever stock is following, we want to price in those moves. So in order to find out where the where NUGT goes, we would have to look at GDX, and that's typically how you look at that. So we see GDX, and let's look at NUGT. It's definitely a inverse, or not an inverse, I'm sorry, but it's a gold bull, right? So dust is just the opposite. We see NUGT down 11.57%, and we see dust up 11.7%. So we see that, there's inverse going on, and the easy way to track to see where these stocks are going is this right here, GDX. That is the key to knowing where the stock's going, and the key to knowing where GDX is going, we have to look at the gold contract, right? So there's more homework to be done to understand where these stocks are going, and we might see gold hit that support level right there. But as long as you guys are doing your homework, you should be, you should be good, right? So let's see what else stock that we do have. I know IBM. Let's check IBM out. We see IBM is definitely getting sold off. I might open up a position in that. We see that, there's absolutely no buyers. I'm gonna go ahead and open this up. I'm gonna go ahead and put this on my watch list for now. So I'm gonna put IBM in. Let's see. I'm gonna go ahead and put IBM in my watch list, and we're definitely gonna watch out and see what happens for that stock. So we see that IBM, it filled the gap last time. We see a gap down right here. Let's check that out. We see a gap down right here. Gap was filled quickly. So we're gonna tomorrow. Let's see what happens. Okay, we see that it's gapped down right here, gapped up right there. So it's filling in the gaps, or it's gapping up. And we just need to fill this gap right here. So this is about, let's see, stock is down about $7. So this is about, I would say, yeah, just about $7 of upside to be had with the stock. And if you bought it right here at about the 159 level, you're doing pretty good. You're profiting up to $3 a share on IBM machines. But like I said, you want to do your homework. I know a lot of people aren't familiar with this oil company, but this is the only oil company that can actually sustain prices when prices go at $30, right? So we want to do our homework, right? So in order to do our homework, it takes time, and it does take dedication. It doesn't take, getting rich, off of one stock the whole time. We're holding it and we want to see where it goes. No, when you want to make money, it definitely takes time, because it definitely, you have to do homework on that stock. So if you guys have any questions for me, go ahead and throw them at me. But I might end this video short. We see ExxonMobil. Let's check that out. ExxonMobil is definitely, we see it's not oversold, but we see ExxonMobil is increasing sellers. So a lot of people are dumping the stock, but the RSI is not showing it. So this is what we have to pay attention to. The RSI isn't showing the, the big picture here. The chalk and oscillator sometimes shows the big picture. We see that buyers increase, and what happens when buyers increase? It's shown on the chart, and it's also shown in the RSI. So we have to pay attention to what the chalk and oscillator says and what the RSI says, and not to mention the, I would say that you have to find what you find to be efficient with stock picking and with being profitable, right? So we can add a daily moving average here to make it even more complicated for a lot of people, but I don't want to make it complicated for you guys. I want to make it, very simple, to where you're just buying and selling, taking profits. But if you want to get really technical in here, we can add a daily moving average. We can add, Fibonacci, all these things. We can definitely make this super complicated to where we're looking at, about a 3-4 screen type of monitor here. And we really don't want to do that. We want to keep it basic for right now. So I'm gonna add a daily moving average here, as we see here. And I haven't really covered daily moving average here, but I would say daily moving average definitely acts as a support and a resistance level. So we see anytime a stock dips below the daily moving average, that typically lets us know that sellers are in charge. And anytime the stock moves above daily moving average, that lets us know that the buyers are in charge. So we see what happens right here. The buyers are in charge. It acts as support. And after support, see, like I said, no matter what, support is always going to get pierced through with, or support or resistance is always going to get pierced through with large bars. And that's what happened here. We see that the stock is, it was in charge for buyers. And after a while, that's typically not when I buy. That's typically when I want to look to sell and wait for it to break below daily moving average. So let's check out, the stocks I was talking about. So we see that Netflix is almost oversold, but the key to Netflix is that it's not, it's not oversold on the RSI, not oversold on the chalk and oscillator, but it's showing that there is weakness coming ahead. We see 144 is daily moving average, and the daily moving average is just specific price points at different times. So we have a 1 year daily moving average, and that typically, is all it is. So let's check out something else. We see IBM, because I was just talking about that. We see IBM with a daily moving average of 171. That implies a $9 up move if it does recover. And also what we do see is that when stocks tend to try to recover, they come into, I would say, a challenge to where they're meeting the daily moving average. And usually people, they dump stock if the stock is getting close to the daily moving average on dips like this. So let's say if IBM rallied to all the way back up to 170. If we see 171 as the daily moving average, I would definitely be out, because that's when a lot of technical sellers and technical buyers, they're looking at this and saying, okay, this is getting way too bullish here. Let's go ahead, dump some stock, and let's look at it later, because there's not enough buyers to keep buying this thing up. That typically is a measure of buyers and sellers. That's another way to measure buyers and sellers instead of using the RSI. So let's see here. What's another stock? Darden Brands or Darden Restaurants. And this is just Olive Garden, Cheddar's. I'm not sure what else they have in their portfolio, but this is a restaurant stock. And as we see, the restaurant stock has been up and down all week or all month. And typically, this is definitely a steady dividend type of paying stock. And we see it's even with daily moving average here, knocking up against that support and resistance level. Let's check out Take-Two Brands. So we see Take-Two definitely broke out to 656. And as we see, we're on a large bar type of resistance piercing. A large bar is always following when we want to break out or when we want to break down. So we want to pay attention to that. And as I showed, 60.20 was the old high for this stock, and this stock is definitely going higher. And I'm not sure why it's moving this stock higher, but for right now, I'm pretty sure all video game stocks are moving higher. Okay, we see EA moving higher, getting close to its all-time high. Let's see, Activision. Oh, let's see. Activision, the one that makes Call of Duty. Okay, and they're really close to their all-time high. So this might be a video game trade that's happening, that's developing right here, that's moving on with the NASDAQ that we want to be highly aware of. Take-Two Brands hit all-time high of $60, and that's when NASDAQ was hitting all-time highs, right? That's when NASDAQ hit the all-time high of 5,900. So we want to pay attention to that. So we see a rest from the video game trade, and now we're seeing, more buyers stepping in, and $60 might be the support now for Take-Two Interactive, but we have to see if we're going to be able to hold this $60 level. In order to measure where the stock is going, we want to make sure that we're holding levels. And as we see, we're at 2006. We want to make sure that we're holding this level for tomorrow, so that way the stock can keep trending up. So a lot of levels must be held in order for a stock to go up, and a lot of people to change their perspective on the stock. So let's check something out, and that'll be the last stock for the day. I hope you guys are doing your homework and paying attention to earnings season. Earnings season definitely brings in the dips and spikes that people really love. Let's hold on. Let me check out Robo. This is definitely an ETF that you might be interested in. This is definitely all robots, so automated. So this is definitely cars. This deals with cars. Anything you name it, robot. Whatever. So let's see, ITGR. We see ITGR is definitely getting close to oversold, down 9%. We have to pay attention to why it's going down. But we see what happened when it became oversold. Once again, oversold, had a small pop. But we want to be aware of what happened when it was oversold. We see a small pop. And this might be what's going to happen here. We might see a small pop in the stock. But we see that the stock does become oversold at some point. A daily moving average of 39.32 implies a $4 upside if you do want to buy right here. But I would definitely wait. We see that, we see support is right here. Support is just about right here, 35.23. I've kind of brought my support down even lower, but right now we see where support is, and we might see a gap down even lower. So let's pay attention to that stock. What else do we have? Let's see. We see LBY. Definitely oversold, down 23%, implies $3 move. But if you like to play stocks that imply a 10% upside, this is definitely one to buy. So you can probably buy it at 10.77, look to sell it at 11.77, or you could buy it at $10 and look to sell it when it becomes or when it breaks through that $11 handle. So this is definitely another trade that you might want to check out, and you want to check out why the stock is down. We see that it reported earnings already. It kind of gapped down on the earnings report, and we see that the stock cannot fill gaps, and we see that the stock does gap down. So let's pay attention to those. That's all I have for you guys. Like I said, take care. Always be skeptical of people that that are showing you how much they make, but they never show you the percentage return that they do make. So always be skeptical of that. So that's all I'll leave you guys with. So take care.